Everybody, what is going on? It is Crypto Bobby. Hope you are having a great day, great night, wherever you are watching or listening in from. Wanted to pop on live today, not for a full crypto happy hour, unfortunately, but wanted to pop in live today because some fairly big news came out, and this was actually a report from the New York office of the Attorney General's office that dove into some research that they did from information that was voluntarily provided to them from some of the major cryptocurrency exchanges, not only in the United States, but in the world. And I thought there was some pretty interesting research on it, some pretty good stuff to check out. There is a link below to that. It's virtualmarkets.ag.ny.gov, but I believe there is a link below in the description, so you guys can take a look at that. If you have not read it yet, it is definitely worth the time to check out. But wanted to pop in here, talk a little bit just about my thoughts in general on it, because there's a lot of thoughts, a lot of commentary. Some people are freaking out, some people aren't. Kind of is what it is, but definitely worth having definitely worth the conversation on kind of what is going on with all of this. Looks like I'm having a little bit of an issue with the stream. All right, looks like we're fixed. But one of the big things to this, so if you guys don't remember, back in like mid-April, the New York Attorney General, it was Eric Schneiderman at the time, came out and had an inquiry to a bunch of cryptocurrency exchanges. And if we go down here, the cryptocurrency exchanges included a number of them that you're probably familiar with: Bitfinex, Bitflyer, Bitstamp, Bittrex, Coinbase, Gemini, Itbit, Poloniex, Tidex, as well as in the future Huobi as well. And they all received this inquiry from the Attorney General of New York to respond about like the activities on their exchange. Separately, or not necessarily separately, but there were actually four that basically told the New York office of the Attorney General to take a hike and to screw off. And those included Binance, Gate.io, and Kraken were three of them that received inquiries from the New York Attorney General and basically told the NYAG, or just didn't respond. Specifically, you might remember Kraken, the CEO of Kraken, actually came out and told the New York Attorney General, Eric Schneiderman at the time, who is no longer the Attorney General, because of some not so great things that came out about him in regards to, I believe it was harassment or something, sexual abuse, something crazy, something not good, something that you would not want a public official to be doing. But Kraken came out and said, hey, take a hike. We're not responding to this. They asked for all this information in 2 weeks. We don't have time for this BS. We're not doing it. So Kraken told the New York office of the Attorney General to take a freaking hike. And that is basically what ended up happening. Now, one of the interesting things you guys might be aware of, might not, there is this law in New York called the BIT license that was put in place like 4 years ago, 2014, 2015, I think it was. And it is very, very onerous regulation. It is difficult. It is very difficult. It is the most stringent pretty much in the US and probably in the world, I would say, for these companies to comply to. And when that regulation came out, Kraken said, we're not following this stuff. This is ridiculous. This is too costly. This is going to take up too much time. We're not going to do it. So we're leaving the state of New York altogether. If you're in New York, some of you might be. If I log on to something like Shapeshift right now, I'm actually in New York. But if I go on to Shapeshift, it might say, let's see if I can do Shapeshift.io. Yep. So if I go to Shapeshift.io, because of the BIT license right now, I actually can't use Shapeshift because I'm in New York and I don't have a VPN or anything like that on me right now or outside of the state. So that is just to show kind of how onerous the regulations there are below. Then it goes on to the BIT license, blah, 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 blah. But what came out of this report today, in case you guys haven't seen it too much, is some really, I would say, somewhat interesting things in regards to the regulation and the stances that these companies take, these exchanges take. And there were a couple things that I think really stood out, and this is specifically from the New York Attorney General. Again, this is not Schneiderman anymore. This is Underwood. This is a woman. But you can pop down here. There were some deep dives into the automated trading policies, basically automated market making, as well as the kind of ability for a lot of these exchanges to cater towards professional investors. Now, one of the things I think that you might want to be aware of, or just kind of might want to think about when you look at this, is a lot of these exchanges do cater to professional investors, to algorithmic traders, to things like that, and that can often be at the detriment to retail investors. So it's something that you want to take into account and look at. And there are certain exchanges that are much more catered towards essentially that are much more catered towards these algorithmic traders or these institutional type traders at the detriment, again, of retail investors. And also, too, one of the things that the New York Attorney General points out is on the insurance. A lot of these, really none of these kind of exchanges, there might be FDIC insurance on your USD if it's a fiat on-ramp, but there might not be any type of insurance at all on your Bitcoin or on your Ethereum or on your Litecoin or whatever you might hold on that exchange. And if that exchange gets hacked, it's not really the exchange. I mean, the exchange is obviously exposed, but the customer itself is highly, highly exposed. So that's one of the things that they brought up. And two things we'll point out from this. One is they referred, the New York Attorney General referred to the New York Department of Financial Services, which is a separate thing, but they referred Binance, Gate.io, and Kraken for possibly operating unlawfully in New York. I don't know exactly how Kraken could do that because they basically block people from registering from New York because of the bit license. But Binance and Gate.io, possible. It's pretty damn possible that they are operating unlawfully. So that's something to keep an eye on there. Now, on the other end of the spectrum here, we'll pop down here. This was something I think a lot of people, I'll pull down here. This was something that a lot of people were complaining about. We actually have two things. Market manipulation policy, which was one of the big things that came out after the whole Coinbase Bitcoin Cash debacle. But one of the more recent topics of discussion has been BitMEX, and specifically BitMEX admitting that they have their own, or they have an entity that they own, essentially, that takes the opposite side of trades and makes markets on the BitMEX platform. So there is basically a BitMEX market maker that is providing liquidity and is also a profitable entity. They are trading for profit. Now, on the other end of the spectrum, a lot of people freaked out about that. Funny enough, there are multiple exchanges that also do this outside of just BitMEX. I will take a few questions as well. Just wanted to get through this and touch base on kind of my thoughts on the on this in general. But if you do have questions or thoughts on this, would love to hear in the comments below as well. But so, not only does BitMEX do that, but you also have Bitfinex, Bitflyer, Coinbase, Poloniex, and Tidex all trading on their own platform, trading on their own venue. And there are a couple different reasons why that might happen. Number one, might be a platform might actually do that simply to make profit, like any other trader. If you're a trader, you're trying to make profit. These companies might, like Bitfinex, Coinbase, Poloniex, they might be trying to make profit. On the other end of the spectrum, they also might, in addition to making profit, be serving as market makers. And it's funny because a lot of people talk about market makers. You see that all the time on Twitter. In many cases, those market makers can actually be the exchange themselves. And that's what you're seeing right here on the left-hand side. So another thing to consider, but pretty crazy too, if we pop down here, we can see that Coinbase actually disclosed that almost 20% of the executed volume on its own platform was attributable to its own trading. So 20% of the volume coming out of Coinbase is actually attributed to Coinbase themselves and to an entity, basically to Coinbase's internal high-frequency trading team. So something to take a look at, something to consider. And as you kind of continue to evaluate these markets, not only are you trading against other traders, but in many cases you might actually be trading against the exchange themselves, which is pretty crazy to think about. And one thing I will note here too, I think a lot of people are freaking out about Coinbase and some of these other ones. They did provide this information voluntarily, so that is, whether or not you want to freak out about it, they did provide the information voluntarily, so good for them at the very least. But yeah, 20% of Coinbase's volume is actually coming from their own venue, and all these other, in addition to BitMEX, which is not included here at all. But in addition to that, these other exchanges are also trading on their own venues. Either they have an entity that does trading, they have their own trading desk, they have their own algorithmic traders, whatever it might be. Pretty interesting stuff. So we'll take the time to answer some questions here now, looking at some of these things. Sounds like some people are shocked about the 20%. Was fairly surprising. Seems like it's catching some spin on Twitter for sure. So these 1 minute spikes to squeeze short longs on BitMEX are just ridiculous. These exchanges are trading against their customers. BitMEX is kind of a monster in and of itself, and I know there's a lot of negative heat about BitMEX, and also not only if you're trading on BitMEX, which if you don't like it, don't trade on BitMEX, but at the same point in time, BitMEX also now, with both Bitcoin and Ethereum, has two of the most liquid basically pricing instruments for Bitcoin, both the Bitcoin perpetual swap and the ETH perpetual swap. So even if you don't like BitMEX and you're not trading on BitMEX, you still might have impacts because of either these short squeezes or some of the run-ups and some of the quote-unquote manipulation that people believe is happening on BitMEX. Who knows if that's actually, and I would doubt they'd be as brazen to simply do that for their own profit as a whole. But it is something, I mean, you are dealing, when you're dealing with BitMEX or a lot of these other exchanges, very unregulated markets, and that is something to definitely consider. And while Coinbase might be making might be responsible for 20% of the volume on their platform, I would say Coinbase and some of these other ones are some of the most regulatory compliant, if not the most regulatory compliant exchanges out there. So I think they're still doing everything above board, but it's interesting to see because I think a lot of people don't necessarily expect that to be happening from a company that many deem to be above board, a future IPO candidate, whatever it might be. Yeah, so somebody had mentioned, AirSwap or any of the other decentralized exchanges as well, or decentralized marketplaces, whatever, however you want to refer them to. A lot of those have different setups and are kind of, the trading happens in a different manner. The big thing with a decentralized exchange or a marketplace or whatever, it's typically non-custodial. So there is no kind of taking of custody in the middle of those transactions, but those might be peer-to-peer exchanges. Even on some of the other decentralized exchanges, though, there are market makers, there are liquidity providers there as well. They might be doing algorithmic trading too, but that's probably to a lesser extent than some of these other ones. So what about Binance? So Binance they chose not to respond to, Binance specifically chose not to respond to this inquiry. So if you go down here, we can see where you got, we'll pop up here. Binance. So the OAG, the Office of the Attorney General, investigated whether these platforms accept trades from within New York State, or here's actually the state more looking for. 4 platforms, Binance, Gate.io, Huobi Global, and Kraken, claim they did not allow trading from New York and declined to participate. The OAG investigated whether these platforms accepted trades from within New York State. Based on this investigation, the OAG referred Binance, Gate.io, and Kraken to the Department of Financial Services for potential violation of the New York's virtual currency regulation. So it'll be interesting to see exactly how that might pan out. It might be, Binance isn't based in the US. I don't know exactly. I'm not a lawyer. I don't know how New York might chase Binance down, or if they have any jurisdictional power there. Who knows? But something to keep an eye on. Same with Gate.io and Kraken as well. Todd, yeah, I still have my Gin masternodes. I've taken a massive haircut on them, but it looks like they kind of bottomed out around the I don't know if it was like 2500 Satoshi mark, whatever it might be. But yeah, that was, I should have sold my masternodes at a much higher valuation. I did not, but that is unfortunately part of life, and Jin took a Jin took a dump when the rest of the market took a dump, and I did not take profit when I should have. So you get greedy, things happen. I'm okay with the Zinfin. I'm good, guys. We don't need it. Remember my ignorance. I will always remember my ignorance. So, Nasty J, that is a really good point. Is the trading on one's own venue done in order to facilitate price movements or done to portray larger volume than organically happening? You could make the argument both ways, and maybe in some cases done in a little bit of, done on kind of both manners. Like if you are market making on your own platform for some of these exchanges, you're doing that to provide the best possible you might be doing that to provide the best possible experience to your customers, so they basically get instant order execution. So there's a really small spread between the bid and the ask, and customers have traders or retail investors have the best experience when they're buying and selling, because you are making those markets and you are providing a high degree of liquidity with a small bid ask spread. Now, you could also make the argument that these companies are doing that so that they have a perceived larger volume, because there's this whole cascading effect with larger volume, especially on centralized exchanges. If you have larger volume, if you're like a top 10 large volume company, you've all seen the stuff about Binance, where Binance might be charging $1 million, $3 million, $5 million for a listing fee. They can charge that much potentially for a listing fee because they are the most popular exchange, and there is value to having your token or your cryptocurrency on Binance. However, there are all these other exchanges now, and also Binance kind of on the way up perhaps, but all these other exchanges want to be in the top 5. They want to be in the top 10. They want to be in the top 20, and they want to make money from exchange listing fees, and also not only exchange listing fees, but when people see volume on an exchange, they go to that exchange. Kind of volume begets volume. And the more volume is out there, the more somebody else wants to trade it, because it is a more liquid market. So if you are making those markets, you are encouraging more liquidity, and you're kind of encouraging more people to come on your platform. Nobody wants to go trade on an exchange that has no users and no liquidity. But if you can kind of bootstrap that liquidity through making your own markets, or in the case of some of these other like Asian crypto exchanges like Fcoin and some of these other ones that have done all this crazy transaction fee mining and stuff like that, where they're basically encouraging people to trade and giving them a percentage of profits or tokens, then that happens as well. And that's something you want to keep an eye on too. i.e. Cryptopia. Awesome. So looking at one more. Will the market dump when the SEC rejects or postpones the ETF at the end of the month? I have no idea if the market will dump, probably because it's irrational. Nobody in their right mind expects the market to approve an ETF. I think at this point in time, I think it will be delayed until the maximum amount of time. I said this last night of the stream. I think the ETF, specifically the VanEck SolidX ETF, will be delayed all the way until the February timeframe. That is the one that, from everybody else, has said has the best chance of getting approved. That will likely be delayed all the way till February of 2019, and at that point in time, that's when there will be a serious question about. That's when there will be a serious question about whether or not it will get approved. But in September, I don't think there's any chance, especially when this type of stuff comes out. This doesn't bode well for an ETF. And even, we'll pop over here to Bloomberg. There was an article. Here we go. Actually, no. That one. Where is it? Give me. Crypto, son of a bitch. So CME, which does a lot of the futures for the cryptocurrency markets, for Bitcoin specifically, they are using or leveraging 3 different exchanges for pricing: Bitstamp, Itbit, Kraken, and a couple other, I believe a few others. I'm not sure if those are all 3. but they were called out specifically by the New York State regulators in that report that we just talked about. So that's not necessarily the best look, although when it comes to regulated exchanges, I mean, those are some of the more regulated exchanges out there. But yeah, I mean, this type of thing doesn't necessarily, for those who really want the ETF to happen, or like gung-ho ETF, this is something that necessarily isn't going to help that come to fruition, unfortunately. And guys, at this point in time, I just wanted to pop in here today to talk a little bit about just my thoughts on this regulation and some of the BS surrounding it, and just provide a little bit of clarity in my thoughts. If you enjoyed the video, hit that thumbs up button. I would really, really appreciate that. It helps to get this video out to as many people as possible. If you're new here by any chance too, hit the subscribe, but wanted to pop in here for a quick, I know it wasn't a whole crypto happy hour, only had like 20 minutes or so, but hopefully this provided a little bit of insight and was helpful for you. Looking forward to coming back tomorrow with some more content. And if you missed it earlier this morning, I had my presentation up from NAC3 where I talked all about security tokens, 25 minutes. I think you'll really enjoy that if you're new to security tokens and a lot of that information. So check that out if you missed that from earlier today. Guys, thank you so much for your time. Wherever you're watching in from, I really do appreciate it and hope you have an awesome day or night. Peace.